Hello everyone, this is your host Vaibhav. In today's session of Daily Stock, we are going to consider the quarterly earnings of the Eaton, which is a intelligent power management company. It operates in the various segments to provide solutions for the needs of various companies, which help us fulfill the power requirement, the energy requirement in a optimum way, and it has a growing business. It is not a new company; it is more than 100 years old. But what it offers has been more in demand as the world has progressed, and it has become more energy intensive. At the same time, the need to be more efficient and intelligent in the power management has become a necessary requirement. And with the advent of AI and associated tools, we are going to see the importance of the companies like Eaton growing more and more in coming years. And last few quarters have been nothing less than phenomenal for the Eaton, and we will see how it has been doing for last few quarters to get a good idea of what the future is likely to be, because past is behind us but future is ahead of us, and to make sense of the future we do have to see its past and then figure out the opportunities which might be helpful, which might be of considerable profit generating opportunities for us. So first thing first, we will consider its quarterly report, and afterwards we will also look at the technical charting for the company in different time horizons. This is the Eaton's fourth quarter's earnings report, which was released way back in February 1st, 2024. That's more than 2 months old. You can access the full report from the investors relations page of the Eaton Corporation. Here I will be taking you through the key highlights. We of course won't be able to go through all and every details of these earnings reports because we are going to be short on time. So my emphasis is going to remain on the key figures for the company, like top line, bottom line, and its operating margin, as well as the forward guidance for the upcoming quarter and the year. Along with that, we will be also looking at the cash position of the company. For the fourth quarter 2023, there has been growth in double digits. The revenues have grown 10%, and that has propelled the company's earnings to the record level. So this is the all-time record for the company in terms of the revenue generated. For the full year 2023, the record earnings were also achieved. So not only it is growing in the quarter, but it is also growing for the full year, and this points to the rosy scenario for the company. Segment-wise results are also provided. The segment margins were at 22.8%, and this is a fourth quarter record and 200% point basis point improvement over the fourth quarter of 2022. Instead of reading through all these details, let us go to the quarterly statement of consolidated statement of income. Here it comes. Now if you consider the net sales, the net revenues, it is just little below the $6 billion mark, and here you can see that there is phenomenal growth from $5.38 billion a year back for the same quarter of 2022. For the full year ended December 31st, 2023, there is this figure of $23 billion, and that is considerably higher in comparison to $20.7 billion a year back. Out of this, the company was able to save before the taxes of $1.08 billion. That puts the company's operating margin, on a healthy footing. And after deducting taxes, the net income stood at $947 million, which is also a remarkable growth figure. And this growth is consistent, it is not really fluctuating quarter on quarter, and that has helped the company achieve a net income figure of $3.2 billion for the whole year. And if you look at these numbers, these are almost 30 percentage point higher in comparison to the net income a year back. So if you are achieving this kind of numbers, your share price is bound to go up, and that is what is happening in the Eaton's share price in the last few quarters, where it has rallied phenomenally, and it is still doing so. It hasn't really stopped growing because the expectation is that the next few quarters, at the minimum, are going to be quite good for the company. Its revenues are continuing to grow and are expected to grow. So there is a sweet spot for the company's revenue growth and the profit growth. There is the business segment information. All the segments in which it operates are listed here, and we get a breakup of where the revenue is coming from. The biggest segment for the revenue remains the electrical products in the American markets, where it has generated $2.67 billion. Then comes electrical global, which has contributed $1.5 billion. And then the key segments are aerospace, vehicle, and e-mobility. E-mobility is a new entrant, and it has quite a growth potential in coming quarters and coming years. All the segments besides the e-mobility are in profit. Of course, e-mobility at the moment demands more intensive requirements because there is going to be high R&D cost and associated cost because it's a new segment. So to venture into that segment and establish a strong presence, the company is, of course, needing to spend more money than it is able to generate. But that is going to set it up for the future profitability, and that is something which the investors are not really going to complain. Now, coming to the consolidated balance sheet. Here, if you look at the cash and cash equivalents, you can see that the company's assets have grown quite a lot. If you simply add two key terms, the cash and short-term investments, taken together, these are the cash and cash equivalents. And in this, you can see that there has been quite a large increase from almost 560 million. The cash and cash equivalents have jumped to more than 2.5 billion. So this is nothing less than phenomenal. This means the company has been able to generate a good amount of money, and that has propelled it to this significant increase in its cash and cash equivalents, which are available with the company for any exigency as well as for any new initiative. to be spent at the moment's notice. We don't really have cash flow segment for the Eaton in this quarterly report, but if you were to simply add some key figures, you are going to be able to arrive at these cash flow numbers. And for the company, the free cash flow stood at US dollar 1.05 billion, which is also a growing number, a high number in comparison to the US dollar 977 year back. And then for the full year, the free cash flow stood at US dollar 2.86 billion, which is also significantly higher, almost 40 to 45 percentage point higher in comparison to the free cash flow generated a year back. It has also listed its key acquisitions, and it has acquired the two companies in China. It has exited its business in Russia, and also it has expanded its presence in the Europe. So all these key initiatives and the developments which are going to be of significant importance for the investors have been listed here. Now we are going to turn our gaze to the technical side of the story. We are more or less done with the fundamental side, and the fundamental side is telling us one thing, that the company's financials are strong, the business is on the sound footing. The only thing is whether this party is going to last or not. That is the only question, because in the coming quarters, the expectations are that the company's growth is likely to be sustained. But then, of course, it's an uncertain question. We are only looking at the past. We are not going to get a certain answer. But still, if the company's financials are sound, if its growth prospects are sound, then the odds are going to be in our favor, and that is what we are trying to establish using the fundamental as well as technical markers to be able to decide in a meaningful way. For the short-term analysis, we can use the candle period time frame of hourly, and if you consider the hourly time frame, you will see that for last couple of weeks, and even if you go back in time couple of months, the things have been moving only up and up. It hasn't really shown any signs of fatigue just yet. Even in today's session, prior to the sharp move on the lower side, after the statement of one of the Federal Reserve member, we had this stock which was growing. It started the day on the high and it was continuing to grow. But once the statement came in, the financial markets turned the corner and started to decline. And in this decline, ETN, the Eaton has also lost some of the value, but its losses are fairly limited, and it can also be considered as a opportunity for us to trade and invest if it doesn't really decline much in the coming sessions below the immediate swing low, which is there around 310. If it is able to hold the ground, then in due course of time we can think about newer trading and investing opportunity on the bullish side in this phenomenal bull run, because after consolidating around 310, it had rallied another 5 percentage point, and that kind of possibility can't really be ruled out as long as it continues to make this formation of higher highs and higher lows. So the only thing which we need is dip and do consolidation around the lower lows, around the lower levels closer to the prior swing low, and then we can take our chances and go for the trade as and when we find that the risk reward ratio is favorable for us. So for next few sessions, watch out for the price formation. If there is this deep and it declines further, then it shouldn't really decline past this immediate swing low of 310. And if it does that, if it consolidates and holds the price level closer to the immediate support, we can then initiate the trade for going long as and when things look promising, as well as there is good risk reward ratio, so as to make sure that in the eventuality our trade, our expectations going wrong, we are not really losing too much money. So that is also a key requirement. Now for the daily time frame, it has been a rally in a one way manner. It hasn't really corrected much since it has started to rally around 230 to 40 levels in the beginning of the year, and even on these elevated levels it is not really showing any signs of stopping, and that makes it a bit difficult stock to trade with, because in this kind of a one-way rally we don't really get any newer trading and investment opportunity unless there is extended consolidation in the stock. So for this rally, the consolidation phase was over by the month of October, November, and from there on, it gained momentum and started to rally higher and higher. And it is not showing any signs of stopping just yet. But then, as I said, we have also have to be mindful that our assessment might go wrong, so as to ensure that in the eventuality we being wrong, we want to ensure that there is not much of an loss in the event of we getting our expectation wrong. So we do have to ensure that the risk reward ratio is also favorable, and if we lose, we shouldn't be losing too much. So on this elevated level, that is going to be a bit difficult for us to manage, and as a result of that, I would recommend going for a wait and watch approach from the medium term perspective. If and when things stabilize after due consolidation, we can always take a fresh look. But right now, that opportunity is not there. In the longer term, we can go for the trade if there is a opportunity, but in the longer term also there has not been a serious correction and consolidation since the this correction from 240 to around 190, and then onwards it has been a rally one way higher and higher, and that makes it a difficult job for us to trade and invest from the longer term as well, because if we go for a new trade at the current price level, it might continue to go wrong, or it might continue to go up, or it might simply start going sideways, or it might change the momentum and start to decline. So in this eventuality, there is only 33% possibility of it continuing to go higher and higher. That reduces our odds, and we don't really want to go for a new trade at the current price formation. So for us, the correction and consolidation phase is going to be a highly important requirement, and only after that we can decide on the next course of action. So for next few weeks and maybe even next few months, we won't really be getting any good trade in the Eton, and we will have to wait, we will have to hold our horses, and then in course of time we can be fairly confident of finding a optimum risk reward ratio trade. we have already seen now all the key time frames, and only in the short term we are likely to find the trading and investment opportunity. But for the medium term and the long term, the weight is likely to be quite substantial, because the price formation are not really conducive for newer opportunities to be generated anytime soon. So that's my assessment of the Eaton's fundamentals as well as technicals. And for us, we will have to now go for the trade and investment decisions differently according to three different time horizons. In the short term, you might get a good trading opportunity in the next few sessions, but for the medium term as well as for the long term, we might need to wait anything anywhere from couple of weeks to couple of months to maybe even a couple of years. So that's my outlook for these three different time horizons. And now it's time to sign off for the day. If you have found session informative and useful for your trading and investment decisions, do write to me in the feedback. You can also like and subscribe to the channel so that you will be able to be get notified for similarly interesting sessions hosted by me as well as by other technical hosts on this platform. Now, I am signing off for the day. I will be back tomorrow with a equally interesting company to work with. See you next time. Thank you all for joining in. Goodbye.